Time for the ETF report. We're zeroing in on 3 crypto ETFs. Our guest says despite the sell-off we've seen in Bitcoin, if you zoom out, the fundamental backdrop keeps improving. Let's bring in Mike Philbrick, CEO of Resolve Asset Management. Mike, always great to see you. Just remind us, over the past 2 years or so, the advent of crypto ETFs has really revolutionized the space.
It certainly has, and the current drawdown is a reminder that crypto does remain a highly volatile asset and a reflexive market. You know, when momentum breaks, the decline is often amplified by a leverage unwind and liquidations, which we have seen over the last several months. At the same time, as you point out, ETFs have brought in billions of dollars, and the asset itself is garnering attention and becoming more mainstream. You know, one of the biggest challenges to adoption was the regulatory framework out there. That's what institutions were saying, and they're getting more and more of that clarity as we see.
Let's get into 3 ETFs and their different features here. Start off with one that's pretty straightforward, IBIT. It's the iShares Bitcoin ETF, and it simply is designed to reflect the price of Bitcoin.
Correct. And they're going to hold the actual Bitcoin in the ETF structure. And this is from iShares. And it's really the cleanest way to have a Bitcoin allocation sleeve that you can simply rebalance to. And I think rebalancing is incredibly important with the volatility in this asset class. So it allows for easy portfolio implementation aside the other assets that you have in your portfolio. And this IBIT ETF for iShares is the most profitable ETF in the iShares lineup, too, just showing that the asset class has merit to some degree.
Well, what do you mean profitable? For the provider, Mike?
Yeah, for iShares, actually. And this particular ETF is in the 40 basis point range for cost. So it makes it one of the low-cost providers for the Canadian investor to invest in if they're looking to have a Bitcoin sleeve in their portfolio.
But it's profitable just because of the flow through of the management fee?
Yeah, because and the sheer size of it, and the fact that it's a little bit harder to custody, so they charge a little bit more than, let's say, your typical S&P ETF, which will charge 2, 3, 4 basis points. 40 basis points is quite a bit higher than that, due to the newness of the asset class and the way you have to custody it. So again, iShares has a vested interest in making sure that the product remains viable.
Your next idea is FETH. It's the Fidelity Advantage Ether ETF. And of course, Ether is a slightly different beast from Bitcoin. What's the attraction here for investors?
Well, ETH is the smart contract layer of the digital asset world. And, the Ethereum network is getting a lot of play just because we're hearing a lot about stable coins, and most stable coins are built on the Ethereum network. And, this is where we see stable coins being legitimized through the Genius Act, and now getting more clarity as it works through the Clarity Act to provide that buyer of short-term U.S. treasuries. And all of that leads back to Ethereum being the base layer underneath that. So this is the smart contract layer, a little bit more of a technology play with a bit of store of value. And you're seeing that adoption of stable coins grow dramatically, as well as the potential for the tokenization of further real-world assets. You're seeing it in money market funds. Next will likely be bonds. And we're seeing from the regulators, both the SEC and the CFTC, this clarity of regulation on how they're going to be regulated, clarity from taxation. And so this smart contract layer really enables the transaction layer at a much higher speed than we have in banking currently.
And I think you mentioned tokenization, and that's really a version of these other securities that can be traded easily on digital platforms.
Right, and the settlement layer. So, we have a T plus format. So if you buy a stock, the settlement is T plus a day. And that full day, where's that capital sit? Whereas if you were trading on a tokenized ledger, that happens immediately. And so you get better use of your capital and more velocity of money just generally in the economy.
And this final one is a broader ETF, NCIQ, US listed, and it's the Hashdex NASDAQ Crypto Index US ETF, and it's a multi-asset crypto play here.
Yes, and so what you're looking at here with this ETF is rather than trying to sort of say, well, I want to be a Bitcoin fan or I want to be an Ethereum fan. This just takes a market cap approach. So in this ETF, you have Bitcoin representing about 77%, Ethereum 12%, XRP 6%, Solana 3%, and a few others. So you're kind of taking a boggle approach, if you will, or a Vanguard approach, where you're saying, well, I don't know which technology or which crypto asset is going to perform, so I'm just going to buy them in their market cap weight. And this gives you a little broader exposure. Now, this one trades in the US, so you have, if you don't want to deal with the US exchange and those types of things, there's some challenges there. And as we say, the majority is Bitcoin at 77% and Ethereum at 12%. But it gives you sort of a full view of the market cap area of digital assets. And I think investors do want to think about this from the perspective of making sure they do a small and intentional allocation.
Mike, thank you very much indeed. Mike Philbrick, CEO at Resolve Asset Management.